So are you recording on your side?
No. Yes, I'm recording from my side.
Yes.
I'm recording from my side.
Okay. Right. So we will have now, that is 120, not 120, 260 cash. So they put also on cash. Report on cash. So I will debit the purchases 260. Then I will credit 260 cash account. Cash account. So I'm reducing cash account. I don't know how much is the balance at the moment, but I'm reducing the cash account. The cash account. And then that they paid rent by check. They paid rent by check. So the first thing when recording any account transaction or any transaction in finance, you have to ask yourself the classification of account. What is a rent? Is it expense? Is it an income? Is it a liability? Is it an asset? So rent is expense. So we have now an account called rent. We'll have an account rent. And then anytime you increase expenses, anytime you increase expenses, whether it is a rent, transport, electricity, what happens? It goes up. So when it goes up, you debit. So we will debit a rent of 35,000 and then we reduce. It was paid by check. So we will reduce our bank balance. So we will reduce by our bank balance by crediting. So I will have bank here. I will have bank here. So I think I can cut this because we don't need this one. We know what we are looking at. We are looking at financial statement. So this one, you can paste it downward here. Then, and then on date the 13th of May, they bought goods on credit from John worth 470,000. So John is a creditor. So here we have a John who is a creditor, or you can call payable. So you can call creditor in bracket John, because he's the one selling goods to Spice Limited on credit. So it is these are what? They are a liability. They are liability to Spice company. They have not paid. So if it is a liability, you should credit because liability may increase. So once liability increases, you credit. So we will credit that amount of 470,000. This was goods. So what happened? We debit the purchases account. We debit the purchases account or cost of sales. We will have the purchases account, the same amount, 470. And then the next transaction is that sold goods worth 315,000 on cash. So now when you sold goods, which account are you opening? First, we are seeing there is a cash account, which is very clear. We have to receive that money into our cash account. But now we are selling to our customer. So if you are selling to a customer, it means we are getting revenue, which this revenue is an income. So we should have an account called sales account. So we should have a sales account here. Sales account is an income. We credit 315,000. And then we debit cash. We have received this amount in cash, which is 315,000. 315,000. So once you receive that, we go to the next transaction. Sold goods on credit to Rose worth 580,000. So Rose in this case is the debtor. Rose in this case is the debtor. Another name of debtor, we call it account receivable, or Yes, account receivable or debtor. So we have a debtor here who is a customer. Debtor is a customer, but you sold goods on credit. So it's called Ross. So we debit that amount, 500. It is an asset. These are current assets. So whenever there is an increase in assets, you debit. Whenever there is an increase in assets, you debit. So this is an asset account. We debit that 580. And then we credit which account? We credit the sales account. These are sales. We credit the sales account. And then now received from Rose 420,000 cash. So Rose pay. So when Rose pay, you will reduce this balance of 580,000. So we will have the debt, the cash account. You receive that amount first in cash account, 420,000, and then we reduce the debtors account, specifically Rose, by what? 420. By 420. So this general ledger, this one we call it general ledger. So it should balance. So general ledger is an account which record all the transactions. It record all the transactions. So this account should what? Should balance. So I can, if I add the two, it should balance. No, the formula should start up there from this. So it should balance. It should balance. Yeah, so account may balance now 2.8, even though I think, is there anything to mewacha? There is a 35,315. 180. Where did we record 180? We skipped that 180. There is a deposit. Deposit 180,000 in the bank account. So there is a deposit here. Bank account. So they deposited to bank account. So there is a deposit. So if there is a deposit, so we have not been told where was this deposit coming from. Where was this deposit coming from? So if it is silent, it means this deposit was coming directly from the directors or the owners of the company. So we will have bank. We will have bank here. We debit bank 880,000, and then we credit the capital account 180,000. 180,000. So now, if I update my formula, we should get a closing figure of what? 3.02 million. 3.02 million. So this one we call it general ledger. We call it general ledger. So if you are doing any practical account, you should know how to generate the general ledger and how to interrogate the general ledger, because most of the external parties, especially the KRA, whenever they ask the report, they must ask the general ledger accompanying the financial reports, accompanying the financial report. So is there any question from that point? That is the first step.
The 160, 640, the capital. Oh, may include in.
Yes.
Okay.
Okay, so from the general ledger, we can comfortably get the trial balance. So I don't want to use Excel formulas. Even though we can choose Excel formulas, but I will teach you later that if you use Excel formulas right now, then we will get confused. So here, this is a general ledger. So from this general ledger, I can be able to get all the reports. Which is the main report is the income statement, balance sheet, and the statement of cash flow. So first, I have to prepare what is called the trial balance. I hope you have heard about the TB.
Yes.
So I will prepare my trial balance here. I think I can go now to the new sheet. So I can prepare my trial balance here. I will copy this data, then prepare my trial balance here so that we don't have because we have not gotten the balancing figures for the balancing figure for each asset because we have cash here, we have another cash there, so we don't know the balancing figure. So what I do, I will copy this, the general ledger, paste here, and remove the duplicates. So I will remove the duplicate from Excel by going to data, and then remove the duplicates here. So these are the only chart of account I have. So we called this one chart of account. So in this chart of account, I can get the balance, the debit balance of the total cash. I can get the total balance of the debit and credit. So I will get the total of capital, cash, furniture, bank, purchases, and then get the different. And then I will have the different here. I will have the, which the different is that I will take this minus this, and then that one, and then I will drag it downward. That is the difference. So I can't use Excel formula. I can't use Excel formula to get the different or to get me these values. So I will use this one. So don't mind with the Excel formula. I will teach you that later. So which is sum if the range is this, I can lock this. I can lock that, comma, I need this criteria, comma, the second, no, this one should be B. This one should be B. And that criteria is H. Another one should be D. Then I can lock this, get the sum. So there is no debit. Drag it downward. So this can put this one in 1,000, put the decimals, 1,000 separator. Can also put 1,000 separator. Then I can get the credit also using the same formula. Sum equals sum if the range is this one. I locked that. Shift F4, comma, the criteria. I think I should delete this detail, yeah, or I can't copy this, yeah, but I don't get confused. So I can say sum if that BB, I lock that, comma, get the capital, comma. Now in this case, I'm summing credit, which is this, and then I close that bracket, enter. So I'm getting that, I drag it downward. So now, so this is not a trial balance. I'm trying to get the trial balance. I'm trying to get the trial balance. So what happened now? If capital is because it is a negative, so we can use now the Excel formula. We say if this one is more than 0, what do we need? We need a debit. We need a debit, or we need a debit, or what? Credit. If it is not, then you give us as a credit. But now we need because this one is a text message, you have to put the double quotes. Opening and closing. So is that this more than to this now? So we should put more than inafaa less than inafaa ikuwe hiyo less than here. So if this one is less than 0, then we need it is a credit. So it is a credit balance. So this is what we call the balance. So this is what is called the balances, the balancing figure. So I drag it downward. You can see now we only have the credit with sales. These are the only credit values. So you can put on red the one with credit values, the credit bar balances, and the other ones are the debit bar, the debit balance. So that I know these are my chart of accounts. So I will copy this chart of my account here and prepare a trial balance. So I will prepare a trial balance TB, which this DB also, it has a debit and credit. Debit and credit. I will apply the same formula equals the sum if. So my range is this one. I can lock this. This is my range, comma. And then this is the criteria. No, criteria now is a criteria. So I will use what is called the sum if with more than one criteria. With more than one criteria. So I will use not this one, sum ifs with S, this one. So the sum range in this case is this one. And then I lock that, comma. The first criteria range is this. I locked that. I have to lock the two also. Even this, I have to lock this, comma. A criteria is this. That one I don't lock because it will keep on changing as I drag downward. And that comma. The second criteria range is this. The second criteria range is that. Locked also that. To locked, comma. Then criteria range is this. Then I don't need to. I can lock. I can't lock the row alone, which is can say. Yeah, that one. That I can close. So you can see we don't have a capital in a credit balance. I can drag it downward. Now where are we getting hash values? Oh, because this one is moving. You can see this one is moving downward. So the formula here we should fix it. This one is not fixed here. We should fix also that. Yeah, so you can see I have the figures there. Then I can copy my formula here, but I should make sure that this one I fixed the. So this one I can fix the column alone. This one I have to fix the column alone, which is that. Fix the column alone, so I can drag it downward, drag the formula on this side, and then drag this one on this side. I can't multiply my formula here by -1 so that I remove negative. That negative is showing us that it is on a credit value, but I can't remove the negative by multiplying by 1. So now I can sum my credit, my trial balance if it is balancing. So you can see our trial balance is duly balanced. Our trial balance is duly balanced. I have not used any calculator, not use anything else. This is just the formulas for Excel. So Excel is also a powerful tool which you need to understand. I know we don't understand those formulas at the moment, but we will cover it. Yes?
I'm getting nothing.
But don't, you are.
Okay, I'm getting nothing in what you are doing. Like, I'm totally confused.
Like, I don't want you mind with the Excel function, but are you getting the concept of getting a trial balance?
Yeah, the concept, I'm getting the concept.
Yes, because these are, we have to get the ending balance, because remember in a trial balance, if it is to prepare the cash account, or a T format account for cash, a T format, if we have the running balance here and we only take the carry forward to the trial balance, and in this case, the carry forward is 995. That is the balance carry forward, because the debit has the balance of 1.3 and the credit has the total of what? 380. So the difference is what is called the carry forward. So this one is the carry forward, and it should be so if you open a T cash account balance, so whatever it is in credit side, it should be on a debit side of the trial balance. It should be on a debit side of the trial balance. That's why in appear, it is appearing on a debit side of the trial balance here. Yes. So now from this trial balance, I will be able to get the income statement. I can be able to get the income statement. I can be able to get the income statement, which the income statement, you normally have the sales, and then sales, purchases, less the purchases, After less the purchase, you get the gross profit. After getting the gross profit, you less expenses, which in this case, I can see only expenses we have is rent. Don't have any other expenses. So this is the income statement. So your income statement also should have a debit and credit balance, debit and credit, which we have a debit. Sales should be credit, which it is this one. So I link that one. That is the sales. Purchases should have a debit. This is purchases. Where is it? Purchases. This one. And then I can get the gross profit. The gross profit, I take the sales minus the purchases. So that is my gross profit. Then I less expenses. I have expenses here, which is rent. So I only expenses is rent. So I can get the net profit. I can get the net profit. I can get the net profit, which will be our gross profit minus total expenses. So this is our net. This is our net profit. That is our net profit. So from there, you can get you can now prepare the balance sheet.
I'm not hearing what you're saying, Madam.
So after this trial balance, we are preparing this income statement. After income statement, you prepare balance sheet, right?
Yeah.
Balance sheet. Prepare balance sheet. Which balance sheet? It composed of non-current assets, the current assets, capital, and liabilities. So current asset, in this case, we only have the furniture. So furniture is the only current asset which we can see here. And asset should have a debit balance. So should have a debit here and credit here. So we should have a debit over furniture furniture is 120. And then we don't have any other non-current asset. We have current assets. Current asset, we have cash and bank. We also have the debtors. So I will get the total current assets, which this is our cash. No, should be side. This is cash, and then no values. That is cash. Bank is this one, 145. Debtors 160. And then so we can have the total assets. So you can have the total asset, which is the fixed asset plus. So if I sum these, that is the total current assets. 1.3. So I can get the total asset, which is the fixed asset plus the current asset. So this is my total assets. That is my total asset. Then here I will have the equity and liabilities. Equity and liabilities. So equity and liabilities will have the capital. We'll have the capital, and then we will have the net profit. The net profit. Have the net profit. We don't have. I have not seen the drawings in this case. So our capital is this one, 820,000. Our net profit is this one. This is our net profit, 130. We don't have the loan. So we don't have the current and current liability because I have not seen the loan. But we have the current liability. So current liability, we have creditors. We have a creditors. We have creditors here. Which, how much is our creditors? This is 470,000. So our account, we should have the total equity and liabilities equals to our total assets, which now, if I take this plus this plus this, I should get the total liabilities being 401.4, which will be equals to the same. And actually, these principles will not change. So accounts are easy change. What change only is the place where you are working from, the environment. So what changes the environment? The computer maybe you are using, the people you are working with, and the desk. But the principles of account remain the same. So it will not change. It will not change. So, and that is the key. If you understand the principles of account, then the other thing is just very simple. It's just learning the computer. Where do I put this one in a computer, right? So this is the balance sheet we have done with the second account. That is the balance sheet. So given that you have a duly balance sheet, you have a duly balanced balance sheet, then automatically you can get your cash flow. Can get your cash flow statement. Can get your cash flow statement. And that's why whenever there is an audit, the auditor only asks for trial balance. They don't ask a lot of the information. They just say, send me a trial balance. From there, you can get all these other statements. You can get all these other statements. Now, unless there is a question for our balance sheet. Is there any question from the balance sheet?
No.
There is no question.
I'm digesting. Okay. And total equity and liability.
Yes.
See, we used to subtract. Oh no. Yeah, it's okay. We used to look at this one and this one.
You can get the net assets. You can get the net asset, which you take the total asset minus the liability, the capital, that one. So that is a different method, but so long as it is balancing. So you can use that method also, but so long as it is you are correct, you are putting in the correct account. So now the cash flow statement
in the non-current asset.
Yes.
We used to look at the
depreciation, but
the NPV.
Depreciation. Yes, the net book value.
Yeah.
You have to look at the net book value, but in our case, we have not been given the depreciation. So the value which is there, we assume as it is a net book value. It is a net book value.
Oh, it's a net book value, yeah.
Because we have not been given, but if there was, then we could have adjusted our non-current assets. So now This one, for cash flow statement, you have to understand the format. So I'm now giving you assignment to go and look at some of the format for this. So you take the profit before tax, even though there was no tax here. So which is, in this case, we will take the net profit as the profit before tax because there was no tax here. And then you do what? You adjust to it, Number one is non-cash item, which we don't have a depreciation. So we don't have a depreciation, we don't have the interest, we don't have a loss on disposal, profit on disposal. So those are the ones which you adjust here as non-cash item. But in this case, we don't have non-cash item here. We don't have non-cash item. So if we don't have non-cash item, then we go straight away to the working capital, the working capital. And to working capital, you talk of what? Increase or decrease, in, number one, inventory, which I have not seen inventory, payable and receivable. So inventory, we have not seen inventory in our case, so we don't have that. And then payable. So what happened when payable increases? Is it cash inflow or cash outflow?
Payable.
Or if payable decreases, is it cash outflow or cash inflow?
Cash outflow.
If it is what? If it is increases?
Cash outflow. Cash outflow.
If it increases or decreases?
Yeah, boss.
Yes.
I think it decreases.
If you decrease the payable, what does that mean? You are paying suppliers, right?
Yeah.
So if you are paying suppliers, you are reducing your cash, right?
Yeah, it decreases.
So it decreases. But in our case, we have not paid the suppliers, but we still owed that money. So we are not paying. So it is cash inflow, right?
Yeah, it's cash inflow.
So this one should be a positive figure, which it is in a trial balance here. So that one should be a positive figure. Receivable should be a negative figure. Instead, the customers pay to pay us, they stay with our money. So if they stay with our money, it means it is the cash outflow. We are losing money. So our balance of debtors here is the cash outflow. So it should be a negative here. It should be a negative to show that it is the cash outflow. And then from there, I get the net of this. I get the net of that. And bring it here. And then I go to the investing activities. So investing activities, we have not bought any furniture or a motor vehicles here. There is no purchases of the purchases. Cash used to pay to purchase the furniture or motor vehicles. So if you see, there is no cash which is we have used to do investment. But what about also the financing activities? The financing activities, we have not paid any. We have not paid any shareholders. There is no dividend. There is no any other thing. So it means in this case, in this cash flow statement, the financing activities and investing activities will not be affected. Because we have not paid the shareholders. There is no dividend. So that one will not be affected. So at the end of it, we have the cash flow for the year. which would be the sum of the two. This one is a positive, so it will be this plus this, which give us that 440. And then it should have your cash and cash equivalent and cash equivalent and cash equivalent at the beginning. So cash and cash equivalent at the beginning, which we have not been given, but we can have the cash and cash equivalent at the end. So cash and cash equivalent at the end, you add the two, the cash and bank. So you add the two, the cash and bank, which is this equals to sum of this. So that is 441. 441. So what is the difference here? So is this account correct? Yes?
You can see the format is correct, and also, yeah, it's
The
correct.
format is correct, but is our figures correct?
Yeah, they are correct.
Is it that unasema tu ndio tuendelee ama which judgment umetumia umesema is correct?
Okay, and when the figures are correct, when the formats are correct, also the figures will be correct.
No, you can be having the right format, but you are putting the wrong transaction.
Okay, about the cash and cash equivalents at the beginning, why did you use the cash and the bank? See,
That is the total amount. That is the total amount available for you. When you are doing the cash flow, we don't only when you're doing the cash flow, you don't consider the cash alone. You consider what is in the bank, so what is in the cash. That's why we have the petty cash and the cash account.
But cash and capital, it was 640 at the beginning.
Cash book will not. We don't use the capital in the cash. Yes.
The general ledger in the beginning for the question in the beginning, and this person started his business at 640. Yeah, it started at 640. Why can't you use that cash at the beginning, since it is cash equivalent at the beginning?
So those are the some of the questions I wanted to. So now, are you in agreement that whatever we are having here is not correct? So those are some of the things I wanted to check. Look at the capital. At the end of the year, we have 820. 800, and at the beginning of the period, we had how much?
640.
So there's a difference of what? So 820 minus 64.
What is all? 40. Let's see.
So that is the cash inflow. That is the cash inflow. So take 800 minus 640, it will have 180,000 here. So which are the assets? Which are the assets? Because this account is not balancing. This account, see, the correct figure should be cash and your cash and cash equivalent at the end should be 1.141, but we are having, which is this one is correct, but this one is not correct. This one should be the same. This
the cash flow for the year and the cash equivalent, the cash and cash equivalent, they should be the same.
Yes, the cash for the year and cash equivalent should be the same. That's why you're having the cash flow statement. So each account should balance. The other two accounts may balance. Why is it that you are not balancing these? So which other thing kenye tumeacha? Think about it.
And about the yeah, I don't know what it is. Dividend. Is there a dividend?
We have not seen any information relating to dividend here. So there is no dividend.
And there is no proposed
There
tax.
is no Hmm?
There is no proposed tax.
Mhm. So I give you assignment to go and balance the cash book.
Yeah.
So these other accounts in a balance. So which your cash flow statement also show. Your cash flow statement should also balance. So put more focus on the investing activities. And remember, we bought a furniture. So there is what is called we bought a furniture on cash. And that one should also affect your cash flow statement. Then we pay to rent on cash, which will also affect your statement of cash flow. So go and do that. And as you figure more of a cash flow statement. So make sure to get do as much as more possible question for financial accounting so that you can now refresh on these principles. Because this one is not that it is different with what is in our statement. If you open the QuickBook we log in last time and look at open the report, the cash flow statement, you'll find the same thing. So it will be now a challenge if I print the cash flow statement from the system and then I told you take this statement and go to present to director to explain to the director, and then you don't know how to explain that. So it is good to know why is it this one is a negative, why is it this one is a positive, why are we putting this one in this place? Because those are some of the questions. If you take report to the director, they ask you such kind of question. And if you are not in a position to answer, you get a bit of some embarrassment. So I think tutaenda through zile physical zile item yenye hujaelewa tukimit on Saturday. Tukianza yeah.
In Mwalimu, can you do for me?
Yes.
And for the record, please record for me, then you send for me.
Yeah,
So that I can go
I
through
thought you
the
got
room
the
the
record.
day. You may record, but I don't know. Yeah.
Imeingia kwa cloud yako, so utatafuta hapo kwa cloud juu.
Cloud.
But I think pia nimerecord, so I think I will share it.